Success comes in cans, failure in cants. Wilfred Peterson. My friends, we see stocks, gold, Bitcoin up for the day. Bitcoin rebounding big time, 8.56%. We see 20-year U.S. government bonds down just a little over 0.5%. Let's jump first into the S&P 500, rebounding 2.31%. Of course, we saw things on Tuesday pop up and then, of course, down Wednesday morning, trying to recover a little bit. And as we looked at things, recover in the down direction, didn't quite take. Things popped around on Thursday morning, up Thursday afternoon. Regardless of all that, look at where we are compared to the weekly trend line on both the 2-day and a half-day. We are well below that. Thanks to all that down movement, we see it encompassed in the Monday, Tuesday down candle. Now, of course, if we look at the half-day candle, we can see it last Thursday where things hammered down. Then that was Thursday afternoon, a lot of indecision Thursday morning. Then Friday morning down, recovering just a bit, not quite as much down in the afternoon, and then hammering way down on Monday. And then since then, ticked up a little bit, like we said, down on the afternoon on Wednesday, and then popping up strong on Thursday. But does it make a difference to all the down movement at this point? It does not. Still got a lot of strong pressure pushing this market down. You can expect rebounds. And again, with this world, hey, during the COVID crash, I was convinced that we were going to do what we always do. What you see when there is weeks of down movement and the starting of a tumble is you'll see things move down strongly. Then they'll recover, and sometimes they'll recover fairly strong. They'll make their way back up toward where things rolled over. Then they'll dump off the cliff when people lose complete hope. That did not happen during the COVID crash. Why? Because the government printed billions and billions of dollars, in fact, trillions, backed by nothing. They didn't really print it. They just changed decimal points on the Fed's balance sheet in the direction of taking the currency and inflating the hell out of it. That's one reason as we look at these charts, we can just see real things like the S&P 500 just relentlessly, couple of pullbacks over the course of this last year, just hammering up. Now we see things roll over strong. This is one of the biggest down candles that we see this week that we have seen in quite a while. We will keep our eye on it, see if indeed, is the Fed going to pull some magic tricks and lower interest rates, dump a lot of money in, mess around with the overnight rate, inflate the money supply in any number of ways. They're going to be doing that to try to pump the economy up for this election year. They may. I don't take anything out of their potentialities because we've seen, the federal bankers, the international bankers, they'll do anything these days. So don't put it behind you. Follow the charts. Right now, we've already taken our profit in this initial move, and particularly on the NASDAQ 100. We didn't pull the trigger on the S&P. Wanted to make a decision on one or the other. The better chart, and we, of course, were correct, not of course, but we were correct on the NASDAQ 100 being the better chart. We'll see that in just a minute. But as we look, again, still lots of downward pressure, still well below that weekly trend line, still short. Now, the NASDAQ up even more, 3.06%. This is the NASDAQ 100. Of course, beautiful just a technically beautiful crossover going down. And we jumped in and rode that gravy train. Quite beautiful. We do still see we're well below the weekly trend line on the 2-day and the half-day. And we can see, of course, where things recovered strong on Thursday. We saw things starting to recover on Tuesday and then Wednesday morning, then dropping off Wednesday afternoon, but picking back up. Can't find anything to help us trade any of this right now. We look at where we are on the Wednesday, Thursday, 2-day candle. Again, hasn't hit the low that it did before. But of course, we saw that happen in the other 2-day candles, didn't we? The prior 2-day candles from Tuesday the 30th and Thursday the 1st, where we had down movement and then they just sort of stuttered again and then just rolled over strong there on the Monday, Tuesday, where we really saw the hammer hit and we saw the weekly candle really stroke down. Still decent down candle, not some crazy long wick on it. You can see just, not much. Maybe the wick is a third the size of the candle. It could be half. But again, nothing crazy on the wick, which would, of course, show things pulling back up strongly. We can look at the half day and see that hasn't happened. So again, look at all this volume on the down move. Now, we do have a lot of volume on this stutter here where we have a small candle with a wick just on the bottom, maybe a tiny bit of a wick on top if we look close. But again, we'll keep our eye on things, and it's all within the framework of that prior candle. So we will watch, wait, and see. But again, we already made our initial money on this down move in our practice trade. Let's see where things go here. Maybe they'll set us up and give us another point for jumping into more down moves. Let's see where we are on 20-year U.S. government bonds, down for the day, 0.62%. Again, a strong week up as far as the weekly chart goes, but you can see where it really burned off a lot of energy on this 2-day chart. After, what is that? Building 8 days of strong building movement, just to pair that off substantially. Now, we do have a purple line. We've talked about that, a potential ceiling that does appear to be holding bonds at this point. We have 1, 2, 3 full days. We're right on, sitting right there on the weekly trend line on the half-day candle. It'll be half-day chart. It'll be interesting to see if it pops off that tomorrow or rockets through it. Again, the 2-day, just the wick, just sitting right there. Is it right there above it? Yeah, just right there above it. The reason I keep moving the little hand here to the side is these dash lines, I warn you about that. The vertical dash lines can make you think at times you have a longer candle than you do, or candle wick. So you have to be careful to move that to the side when you focus on a candle. You can have that extra little dash hit at just the right spot that makes you think things are different than they actually are. So that's where we are. We'll be paying close attention to bonds, see if they're going to be rolling over or not. Now, of course, it isn't happening on the weekly chart yet, but maybe setting us up for a rollover this next week. What's up with gold? Gold rebounding decently for the day, 1.57% after several days of very strong down move, particularly on Monday morning when, of course, markets were hammering down. Gold, perhaps to cover shorts for people in the stock market, hammered down strong, but is trying to recover as we see stocks recovering. Gold, again, just pushing above that weekly trend line that it had moved below. And we see a doji, lots of indecision after a strong down candle. The Monday, Tuesday, this Wednesday, Thursday, we've got a doji right there, but not even average volume. This week above average volume, red volume. That means, of course, that this week's candle opened below the prior close. That's all that means. And we have a doji this week. We had a doji on the weekly gold chart back on the 22nd of July, meaning lots of indecision, a red down candle. Then, of course, we had a green spinning top last week where gold, again, just couldn't muster the energy to push above. If you ask me, these 2 weeks of lots of indecision, it looks to me like, gold. And again, I'm not going to trade on this. I'm just thinking, looks to me like gold just doesn't have the energy to pound up. So maybe we'll have things rotate over going down. But again, remember, dojis are hyper indecision. And that means that we're not going to guess. We're just going to let gold sort itself out. If it does bounce off and really starts to roll over hard, say tomorrow or next week, then of course we might look for jumping into a down move on gold, but I can't tell what it's doing now. Now, Bitcoin rebounding up strongly. You can see in the morning is where that whole play was, I think. Let's see, what was the high in the morning? 67.75. Yeah, exactly the same morning, afternoon. So again, it hit its high in the morning. And as we look at it, it did run off some because the high was 67.75. It closed at 67.25, but again, up 8.56%. Very strong. Gave us a red spinning top, but we see, that Monday, Tuesday. Bitcoin, again, everything just crashed over those days. Trying to recover a little bit. Still lots of down energy on Bitcoin. It's got a ways to go before it can even get back up to the weekly trend line. We'll see how the week ends and where it begins next week. Patreon members, of course, we will have posted for you on our Patreon page, and we'll be sending you a link with the weekly vertical crossovers this week. I'm sure they're going to be very interesting for you. Always gives you something to look at and potentially practice trade on a Friday. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.